What is up, everybody? It is Friday, April 4th. What a crazy day in the market. Even with it being crazy, there were a lot of good setups that you could have taken today. Starting off on the 4-hour time frame. So as we know, the market has been extremely volatile with Trump announcing tariffs to other countries, and we have just been in a complete downfall. Okay. At this time, I usually tell my students, do not try to time the bottom. Follow the market structure, follow the draw on liquidity, and follow the order flow, okay? Stop trying to fight against the trend. So obviously we are very bearish. Overall, you should have been looking for bearish setups all day long. So we see that we had this 4-hour FEG that we, traded out of, and we've just been consistently on a decline all morning. Every single candle that printed was a down close candle. Same thing on the hourly. You can see here that here at 6 a.m. we created another 1-hour imbalance that we then trade up into. At 9 o'clock, you could have found a short setup here to target the low of day and beyond. Okay. Same thing on the 15-minute time frame. If you look overall, this structure is bearish. We have the high, the low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. It just is a very smooth trend on down. There was really no reason for you not to find a pretty good setup in this downtrend. It was as clean as possible. So coming into the market, right, you have a bearish bias right up here. We tap into this 15-minute imbalance and start to reject out of it. So during the first macro session, you could have been looking for a short setup, which would have been this 1-minute imbalance right here. As soon as that gets invalidated, you could have put your entry right at the close of that candle, right? We're trading out of this. We're targeting the low of day, and then we get that retracement back on up, creating that bullish imbalance into an inversion fair value gap. You could have waited for the tap into it. You could have waited the close of this one. As long as it occurred during the macro, you could have taken it at any time, giving you a nice 1 to 3.17 risk to reward. So we come out, take out that low, we start to put in a new low. Coming into New York AM3, this next macro, what could you have expected? A potential pullback. You could have tried to play the pullback, or if you wanted to wait for another short setup, you would not have gotten a short setup here. But if you wanted to trade the pullback, you have a 1-minute imbalance right here. That price closes above. You market order in as soon as that happens, targets a 1 to 2, and hit within a couple of minutes. All right. Here we start to put in that swing high, moving back on up. Okay. And then during the New York lunch session, what could you be expecting? Following the order flow that we have from the higher time frame, which is bearish, you look for a short setup here because we've came to put in a lower high, and so we are expecting a lower low, targeting the low of day. Does not matter how much it has already gone throughout the day. We are extremely bearish, and so you wait for that 1-minute imbalance right here to get invalidated, market order in, stop above the swing high, the latest swing high, and you target the low of day for a nice 1 to 3.26 risk to reward. Then the trade that I actually took here at the end of the day was because we swept the low right there and we were already at like 5-6% down on the day. I did not expect us to continue going lower. I thought we'd probably retrace back on up to create another lower high. And as you can see, I wait for a very good confirmation. We have bearish trend here. As soon as we start to invalidate this 1-minute bearish imbalance right here, I market order in, put my stop below the low, and I target a 1 to 2 to overall give me a good gain here at the end of the day. This was the only trade I took. I did not take any of these other trades, but if you are my students, you guys know the model that I've taught you. These were the trades that you should have looked for today. Very simple, very straightforward. If you are watching this on YouTube and you guys didn't know, I do have a mentorship. We just started it this week. The first 2 intro to futures classes have already been done this week. Next week, we're going to start getting into the actual trading model. So if you are interested, click on the link down below to find my link tree and you'll be able to sign up still. The signups will close on Tuesday of next week. So if you are interested, check that out. Hopefully you guys ended up green, and we will see what next week brings with this crazy market. All right, guys, peace.